Amid changing economic conditions, leaders at banks, credit unions, and other financial services companies should capitalize on the digital transformation that their institutions have been undergoing in recent years and ensure that they can generate the kind of timely and actionable data they need to make well-informed decisions. Recent turmoil in the banking sector has elevated the risk facing financial services companies industry-wide and accelerated their need to boost their data and analytics capabilities. Before I get into this episode, let me tell you about the Digital Revolution YouTube channel. In order to support this audio podcast and other content on digital business topics, I've established a channel to grow a community of others interested in digital transformation topics. So after this podcast ends, please follow the posted link and become a Digital Revolution channel subscriber. And now, let's get into this episode's content. Banks, credit unions, and other financial services companies already face numerous economic and market challenges, including higher interest rates, inflation, margin compression, regulatory pressures, workforce shortages, shifting customer expectations, and increasing competition from non-traditional service providers. While inflation is expected to slow, the Federal Reserve recently affirmed long-running concerns about the potential for an economic downturn. The Federal Open Market Committee predicts the failures of Silicon Valley Bank and Signature Bank in March likely will contribute to a recession later this year. Just recently, First Republic Bank, which like Silicon Valley and Signature suffered a massive deposit run, also failed. Executives at banks and other financial services companies must ensure their institutions stay on top of evolving challenges, using data and analytics to monitor trends, project the potential impact of various changes, and determine how best to respond is vital. Many institutions have begun a digital transformation over the last few years, working to automate processes and enhance digital services for customers. Leaders should build on that momentum and implement predictive solutions to address economic turbulence in 2023 and beyond. 3 steps financial institutions can take to help drive success are: Number 1, prioritize data as a critical component of strategic decision-making. Number 2, leverage analytics and reporting to inform strategic initiatives. And number 3, utilize artificial intelligence to grow efficiencies. Let me provide more details on these 3 steps. The first one was prioritize data as a component of strategic decision-making. Financial institutions have no shortage of data. To be successful, however, leaders must ensure that they have the right data and that they are using it to make timely decisions. They need to identify what data their business needs and build data literacy across the organization so that individuals at all levels can benefit from data-driven insights. Number 2 was leverage analytics and reporting to inform strategic initiatives. A primary challenge to overcome is knowing how to best use data and how to make the data come to life. By leveraging analytics and reporting for comprehensive insights, financial institutions can move beyond just crunching numbers and give leaders access to actionable data that can inform their decisions. This is crucial for financial institutions to build agility, especially in today's uncertain economic climate. Leaders need to assess the full breadth of data the institution has access to, identify what data is key to monitoring institutional performance, and how to best organize that data to track trends, analyze those trends, and report results. In some cases, analytics might need to drill down into data to the transaction level to gain a deeper understanding of underlying factors behind specific trends. And number 3 was use artificial intelligence to improve efficiencies. Artificial intelligence, or AI, which is generally part of digital transformation efforts already, has the potential to help financial services companies automate data analytics and streamline manual tasks, improving productivity across the organization. This allows valuable human resources to focus on other priorities. For example, banking institutions could automate daily data loads and analyze this in the reporting system. This provides finance and executive leadership teams with actionable reports on the latest balance sheet inflows and outflows to support any funding decisions they might need to make for that day. In addition to automating daily reporting, the planning process should include the ability to model different scenarios such as interest rate changes and other planning growth assumptions. Finance teams can automate the process to transfer base level assumptions between different scenario models and execute analytics. This ensures more efficient and effective processes so leaders are not caught off guard when managing shifting markets and interest rate environments. Digital transformation will continue to propel the financial services industry forward. To keep up, leaders need to prioritize data as a critical component of strategic and financial planning. By leveraging analytics and reporting for more informed decisions and using AI to improve efficiency, institutions can stay ahead of the curve and drive sustainable and successful outcomes despite changing economic conditions. I hope that you found value in listening to this episode. If so, please make sure to give it a like, and I'd greatly appreciate if you would share this podcast with a connection or colleague who needs to listen to what I just covered. Make sure to subscribe to the Digital Revolution channel on YouTube and set your notifications to all so you won't miss any new audio podcasts or videos that are released on this channel. If you have any topic recommendations for the Digital Revolution with Jim Kunkel podcast, you can email me at jim@jimkunkel.com.